I think your perspective is very refreshing because it sounds like you're taking into consideration not just the dollars and cents, not just the numbers. It's not just like, okay, how much, what are your specific financial goals? You're taking into consideration their personality, which for an entrepreneur, that's a lot of it. You just hit the nail on the head. Hey everyone, and welcome to the Business Growth Pod. I'm your host, Allan Draper. So what is financial balance? Simply put, it's managing your assets in a way that allows you to both achieve gains and be at ease with your strategy. Interesting dynamic there. These are the words of Ted Oakley in his new book, Stay Rich with a Balanced Portfolio, The Price You Pay for Peace of Mind. Ted is the founder and managing partner of Oxbow Advisors, an investment firm that specializes in helping individuals with newly liquid wealth to protect their money and wisely invest it. And Ted joins us now. Thank you so much for joining us, Ted. Welcome to the show.
Thank you, Allan. Glad to be here.
Am I pronouncing that correctly? Is it Oxbow?
Yeah. Many years ago, I had property up in Wyoming. There's a place called Oxbow Bend, and I always loved it. So named the company after that.
Gotcha. So along those lines, what was kind of the founding inspiration back in those days for creating Oxbow Partners?
We had a different name originally. It was HBO Advisors, but what we started doing in the mid 80s was, I think the first person we called on was 83 or 84. We would call on, and still do to this day, talk to business owners after they'd sold the company. And that was a way where, well, first of all, we love doing business with them because they're our kind of people. And secondly, we end up working all over the country for people that sold the business. And oddly enough, it's not a lot different today. The companies change, but what happens afterwards and everything doesn't change a lot.
You talk about balance a lot. And for somebody like me, I have a lot of high risk investments. Probably 80% of my portfolio is in privately held companies. And keep in mind that we're talking to entrepreneurs that, you know, it's not just their portfolio and their, you know, financial strategy that might be out of balance. It's their lives, right? We talk about balance a lot in terms of, you know, individuals that have families and with how much time they should be working on their business and how much balance they should be working within their business on marketing or personnel development, all these things. So let's talk about balance and specifically the importance of that for somebody that's building a company.
Well, I think sometimes, and I've seen this a lot of times after people sell a business, Allan, they realize that that's all they did, 7 days a week, 24 hours a day.
Mm-hmm.
And they get to a stage in life and realize, gosh, I didn't spend any time with my kids, my wife, or my husband. And I think most of them, if they're honest, will regret that. And a lot of them didn't give anything back to the community or anything philanthropic. As you get older and as you have more money, you actually need, in a way, you need more purpose. Because your purpose when you're building a company is just that. I mean, you've got all the purpose you need for that. But as you get older and you sell companies, have a lot of money and that sort of thing, you need to have a balance in your life so that, because I've seen people die very, very lonely with a lot of money. And I think it's sad, unfortunately, but I've also seen the reverse. I've seen people with not too much money, they have enough, but they live a wonderful life because it's very, very balanced. And there's a different way to balance. I mean, you balance your personal life, and then you balance your investment life too.
So when you're talking about balancing your investment life specifically, what is an entrepreneur looking to do? Keeping in mind this idea that in the beginning, they're just trying to keep their business afloat. So every last dime that they have, could be going directly back into the company. How do you recommend that an entrepreneur gets out of this cycle of just continuing to reinvest in their company and kind of diversify their assets a bit?
Two things I would tell you. I've bought and built and sold companies myself, and in addition, I grew up extremely poor. So I know what it's like, not to have any money and have to put all the money into a deal. And I think I think that's a different stage, by the way, when you're really driving and trying, you're just at those stages, you're trying to really put something together, and it's a little different than I think more when I'm talking about balance is after you started to accumulate some wealth and you have some money. But at those stages, and there's nothing wrong, you're talking about yourself at 80% private. That's certainly fine. I think people have to determine, when I say balance, and you'll read this in this book, I think people have to take a really good inventory of who they are, okay? And if they are, for example, I take yourself, where you really like private businesses, then that's what you ought to do. What we do say, though, is that there's a spot, part of that money, part of your money that needs to be over here in what we call a base investment, which is those investments are on very tier one, and it never changes. That money's always there. And just in case things get really, really rocky, you've always got something that emotionally will support you because you have this money over here. And you don't have to really think about, okay, I'm going to have to do something, one of these deals or this piece of real estate or whatever. So I always recommend, and I love real estate, I love private business, all that stuff. I'm not trying to espouse that you only do it with stocks and bonds, but the point being is that every really wealthy person I've ever interviewed, and I've written about it and interviewed billionaires and talked to them, and I will tell you, all of those people usually have a fairly large cash portion of what they do. And it's more than you might think, because they'll tell you that where they make the money is when things get really bad and everybody else is trying to figure out how to stay alive. And they've got some liquidity, and they take that liquidity, and that's where they make the best purchases, no matter what it is. And so that's why we've always said you need to distinguish between base capital, which is what I call no touch money, and investment capital. And investment capital can be a lot of things. It can be private business, it can be real estate, it can be stocks and bonds, but you need to separate the two if you're really going to have any kind of balance.
This concept of base capital is an interesting one, because especially recently we see how cash is kind of melting away. If it's not in some type of vehicle that at least, can keep up with inflation, which is very high. Some of the highest in my adult life, at least, that I've ever experienced. Are you recommending some instrument that they keep this cash basis in? Or are you meaning actually like, no, we're talking 100% liquid, or as liquid as it can get, just sitting there in a checking account?
Well, we don't recommend that just because of the banks are not going to pay you any money. But what we do recommend is always have a spread of 0 to maybe 24 months. And you can use treasuries or very, very high grade municipal bonds. You could use too. Most people are not really adept at being able to do that. But in treasuries in particular, and now they have something they didn't have up until it started, some years ago, but over the last 30 years, they never had this. They have a floating rate U.S. Treasury, which is effectively like having your own money market guaranteed by the Fed. You can put all the money you want to in it, and it resets every Monday, but it resets on the 90-day Treasury. So right now it's about 560, 555, and if you want to take money out, you can take it out in the morning. There's no cost to come and go. That's the kind of thing we look for in that kind of money, because it doesn't need to be volatile. But if somebody puts money over there and then they go buy a 30-year bond, that defeats the purpose. Because if rates go up, you're going to get hit hard on that bond. And so we always say, keep it close enough in so that you can always get your hands on it, and it won't fluctuate. The volatility is what kills you, because you want to always have enough money there so that you think, well, if I have to wade through, and I find this true with people who have 50 million or 5 million. If I've got to wade through a year and a half or 2 years here of tough times in whatever business or what I'm doing, I want to know I have enough money there that I don't have to worry about that. That'll take care of that. And so it emotionally frees you up to make the right decision. And I think you would agree, since you've invested like this, that if you're under the gun and you're fearful, you probably are not going to make the right decision a lot of times. And I think that's what it allows you to do.
That's a very interesting point that I wholeheartedly agree with. So I think we need to separate this idea that, okay, we're putting aside some money just to be able to survive, versus this idea for somebody that has a few more bucks that's involved in investing regularly, where it's like, okay, it's not necessarily just to survive, just to put food on the table, but we're doing this so that you can thrive during these downtimes, so that you don't pull back on investments, that you are yourself in a position where you don't have to have a fire sale of a company or an asset, which is an interesting point that you don't hear a lot about. Most of the time it's like, hey, you have your emergency fund. I hear that thrown around a lot, where if tough times, lose a job, whatever, you have that money to be able to physically survive, provide for your family. But it's more than that. It's, for these entrepreneurs, for people that are investing heavily, hey, make sure that you have some cash, that you're liquid, so that, one, you don't have to be part of a fire sale on the seller's end, and two, on the flip side, that you're going to be able to capitalize on these opportunities. Is that kind of an accurate depiction of what you're saying?
You are right on the money, Allan. I mean, what happens is, I think people think, and I always say this to them, I mean, yes, you have to live to play another day. There's no question about that. You do have to do that. But the other part of that is, I interviewed a number of billionaires. I wrote a little book called The Psychology of Staying Rich. And one of the things, I interviewed a lot of people with a lot of money in this, some customers of mine and some not. But it's interesting. I found that in most cases, those people with a lot that much money, in the package they had, they were about 35% liquid. And if you ask them the question, why do you carry so much liquidity? Number one, they have a lot of money. But two, they always say, same answer, that's because when things are really bad and I can buy things cheap, that's where I make the most money. And that's exactly what you just got through saying.
That's interesting. The more I think about it, the more I can add this to certain specific situations. Like, I have assets in different classes, real estate portfolio. I have some public stuff, and I always think, well, if there was something, in the private sector, and I really wanted to buy this company, which I've done in the past, and I didn't have the cash to do it, then I could liquidate one of my assets. But then, if you think about it, if I'm liquidating during a time where there's these fire sales, then I'm losing on that end too, right? Not the best time to sell. But if you have the cash and you're in a cash position to be able to just acquire it, it seems like there's this balance. Ted, what's your kind of forecast of where the economy's going? I've heard a lot about, just in the coming months and even right now, there being opportunities to buy companies and to get assets at a discount in certain areas. Are you seeing that trend continue, or what are you expecting in the next 18 months?
Well, I think one of the things that's different, and I've been through different cycles than most people. Most people, even the older people in the business, have only been around about 30 years. So all they've ever seen are lower interest rates and pretty good times. I go back further than that, and I hate to say it, but I do. But I've been through times when there was a lot of inflation and stock markets didn't go anywhere. And real estate, I've been through periods in the 80s where real estate was horrible. And what I expect is that, my guess is, during this decade, and not just the next 18 months, is that we'll probably shift to a higher level of inflation. Doesn't mean you can't make money, but I don't think we'll go back to that zero bound. We could. I'm not saying we couldn't, it would be really detrimental, I think, in doing so. But if we look at now to 2030, I just think that we're going to be in a mode where it's sort of a stagflation look, and growth will be okay, but it won't be great. And I think with if you look at it from the standpoint of whether I've just ran some numbers on the government debt this morning, and I was just going through to see what it took to get out of the hole, and it's virtually impossible. But all of that weighs on it. We've never been in a spot like we are right now, where we have this much debt, not just the government, but everybody else. And I think that'll weigh on things. I don't think you're going to have these really, really robust times. Not that you won't have some good quarters, but it'll be tougher, I think, on people.
I was having a conversation with somebody that owns a granite installation company. There's been about a 20% or so pullback from where they were in previous years. And so I think we're starting to see that. And one thing that I encourage entrepreneurs to do is find the opportunity. That's what entrepreneurs are all about. And more millionaires are made during economic downturns than at any other time. And it just kind of creates this environment for opportunity. But one thing is certain is that the entrepreneur has to remain hopeful, which can be very difficult during COVID, and I own a number of businesses. I remember blood pressure went through the roof once I realized it was a serious thing and there were going to be all these implications. And it took me a week or two to realize, okay, the dust is going to settle here. Actually, there's going to be some opportunities if we're in a position where we're not fearful. How much of that kind of having a fearful mentality is involved in building and maintaining wealth through investment?
I think you can have some healthy fear. I've always said to a lot of people, because of the way I grew up and the struggles I had, really, we were extremely poor, that I'm probably not afraid of too many things, but I'm also, I don't know why, but I've always carried this mantra with me, Allan, that I probably write it down every day. I always write that God is always with me, or the universe, or whatever you want to say. But I really feel that way. I feel like if you have the right mentality, that you'll get through and you'll find the right things and they'll work out. I'm a believer in the good, I guess is what I'm saying. And so it's not one of those things where I think people ought to be super negative. They need to say, there's going to be some opportunity, and if I miss this one, I'll get the next one, and really look at things like that. That's the way I look at things.
I've got a scenario for you. I have a entrepreneur that just sold a home service-based business, pick it. They did landscaping, pest control, HVAC. They cleared $10 million, mid 40s maybe. What's going to be some key advice that you're going to give that individual, obviously without knowing the details of much more than that? What are going to be some kind of high level general ideas that you're going to give that individual that just cleared $10 million to make sure that they kind of keep, some type of increase coming their way?
A number of years ago, I wrote a little book called Crazy Time, and it was about, and the subtitle was during the first year after you sell a company, crazy time. And the reason I wrote it is because so many business owners, when they sell that company, they're semi-lost, and that's a spot right there where they'll make some poor investments if they're not careful because of ego. So what I tell everybody in that case, like you're talking about, I'd say the first thing I'd tell you is, for some time, probably a year maybe or longer, let's don't do anything with that money. Let's don't make any major decisions with it. Let's let you emotionally get your feet on the ground. You know where your heart is. Is your marriage okay? Are you all right with the kids? A lot of things. There's a lot of things change when you sell a company, because that was your emotional baby, and you're going to have to go through that change first. That's not a time to be making a big decision on, I'm going to go out right back out. But I do say this: if you're in your mid 40s like that, you're an entrepreneur, you're going to buy another company. I mean, I know
Exactly.
that. And I always say to them, look, I'm not the person that's going to tell you you need to put all your money in the stock and bond markets. I know where you're headed. Okay. And one of the things that I need to do is to be able to facilitate that. You know, yeah, we can produce enough cash flow for you at the time being that you'll be okay. But there's no question in my mind about people like that, that they're going to do something. I don't know
Hmm.
what they're going to do, but they're going to do something. And it's maybe 1 out of 50 that I've had like that that didn't do something. But most of the time, and even if, no matter how much money they got, they they are too young to just be sitting on the beach or playing golf, and that's in their blood, you know. So I always know that, and I always say, hey, don't let Wall Street or somebody come along and tell you that you're going to make 20% a year when you know you're going to make more money of that in your own business. So keep that money aside that you're going to need and use to whatever you're going to do with it. You know, don't lock it up. And so I start out with that, and that's kind of how we start those conversations for that scenario you just gave.
I think your perspective is very refreshing because it sounds like you're taking into consideration not just the numbers and the dollars and cents, not just the numbers. It's not just like, okay, how much, what are your specific financial goals? You're taking into consideration their personality, which for an entrepreneur, that's a lot of it. You just hit the nail on the head. Like, I haven't had to work for years now, and I can't imagine my life. I always tell people I'm not going to retire. I don't know what I would do. And I do enjoy traveling. I do enjoy family time, and I enjoy. I play golf. I enjoy those things. But and I was just in Hawaii for 2 weeks. The first week was with my family. The second week I was at a work conference in Honolulu, and man, I was itching to get back, just to get back into my routine, get back in my grind. And so I think that's a refreshing perspective that you have. Like, hey, I know what entrepreneurs are doing. I know that they're going to want to start something, but it's an interesting take that you say, hey, I'm going to tell them, hey, no rash decisions, because I totally see someone like myself, Ted, having an exit and then just, hey, what's the next greatest thing? And I appreciate that. Do you agree with that perspective, that the personality, not just the dollars and cents, come into this decision when you have an exit like that?
Oh, 100%, Alan. You have to know the person you're dealing with, and what I try to get to with them is really what makes them tick. You know, what drives you. And if I find out, and most of the time for entrepreneurs, it is that, okay, but it's not always that. Sometimes I find that, what really drove them is they really always wanted to go, for example, be a missionary overseas or something. They got plenty of
Mm.
money and that's what they wanted to do. And, I don't try to thwart that at all, because I always try to get people, you need to really try to know yourself really well enough to where you can figure that out. I don't go into any situation predisposed with somebody, because I don't know. I don't know what they're like when they're new like that. But I, I will tell you this, I'm a really good listener, and I will ask enough questions where I think I can figure out what really makes them tick. And if I can figure that out, then I know where we're headed.
There's so much value in that, as I'm just kind of thinking through this, even for somebody like me, where it's, I would love to kind of lay out this, my scenario, some of the things I'm trying to achieve in my career, and have somebody just bounce ideas off of me. Hey, Allan, what if we did this? What if we did that? So there's a lot of value there. And again, that's just an impressive perspective. That's not everybody that you would deal with in your industry. So that's fantastic. Ted, where can people go if they want to find you, want to reach out to you, have some questions for you?
Well, the best place, Alan, is a website, oxbowadvisors.com. There's a lot of interviews, a lot of books there, that kind of thing. And I'm part of a bank. I'm in other businesses too, so I know what it's like to be on the ups and downs. And you'll see different interviews in there and different things we do. And certainly feel free to reach out to anybody there. They'll be happy to send you anything we have. So, we don't have a lock on good stuff, but we try to find the best if we can.
Sounds good. Well, thank you so much for joining us today, Ted.
You bet, Allan. Good to visit with you.
If you have enjoyed today's podcast, please leave us a rating. And for daily inspiration and business tips, follow Allan on Instagram. Until next time, remember, we build the future one entrepreneur at a time.